I think you wait. Honestly, we upgraded. We had been market underweight the airline space since December of 2018 because of classic late cycle behavior. That's excess supply growth, negative incrementals. Obviously, didn't predict coronavirus, but the call ended up working sort of by luck because of that. And then we just felt this sort of tide turning. We felt the same thing you guys felt. We saw the data, the same data you guys felt. And I know this space well enough to know that when you have this sort of momentum, even if it is just sort of like first derivative, thoughtless type volume being thrown at the space, we've seen that work before. The data was changing in front of us. Couldn't really deny it anymore. It was too late. It was time to not be negative. Now you probably have to wait. I don't know if this recovery is real or not, but the fact is the airlines are not taking permanent actions to take the supply out just yet. So it's either too early or they're going to take the capacity out and things are going to be good, but it's going to take probably a few months to know. Are
there long-term implications from this work from home phase for things like business travel?
Yeah, that's a good question. We're all wondering the same thing. I mean, ask yourself how much you're going to travel. I think that's probably as good of a test as any. I think the recovery for business travel is going to certainly be slower. We have U.S. airlines adding capacity getting back to 2019 capacity levels by 2022, but we don't have industry revenue back until probably 2024. And the reason why there's that lag is because we expect business travel to recover more slowly than leisure travel. So there's a pricing mix that you're going to see manifest itself through the revenue line. I would imagine probably some permanency of business travel being destroyed will probably occur for very long haul travel. Particularly for those trips that are multi-days and a real grind in different time zones. Those might not have to happen anymore. Maybe it's 10 to 15%. At this point, nobody really knows.
Are there dislocations, Hunter, when it comes to the valuations in the different stocks? In other words, it feels like one big trade now. But are you distinguishing between the airlines based on their debt or their exposure to certain types of travel and seeing any opportunities for investors there?
Yeah, we have 4 outperforms, 4 underperforms, and 3 peer performs with a market neutral weighting. So we're very, very balanced right now. But I would say, I really reject this sort of like overly simplistic narrative of, you want to be long low cost carriers or you want to be long domestic carriers because that's where the recovery is going to be. You really got to think past that. That's not that smart. It's not going to make you money in the long run. If it does, it's by luck or on a very, very short term basis. The stocks that we rate outperform have one common characteristic, and that's an established track record of cost control, good execution, strong and aggressive management teams to go out and take cost out in the event that this recovery is a little bit slower than people might think it might be. So, we like Air Canada, we like Copa, we like Alaska, we like Southwest. There's really nothing similar with those 4 airlines other than this long track record of cost and execution. So, and the valuation, of course, we're valuing them on 2022 earnings with a pro forma year-end 21 balance sheet look, given how much debt everybody's raising. And in some cases, there's significantly negative equity value for some of these airlines. But for those 4 that we rate, we do see some modest upside from a valuation perspective once you get through 21, which is going to be a transition year, surely.
Hunter, thanks so much for joining us.
All right, thank you.